I found out that Wayne Angell is still with us. I'm always happy to see that, the former Federal Reserve governor. Wayne, what do you make of the fact this was apparently a unanimous decision? That would mean that Charles Evan of the Chicago, he's a Chicago president, I think, and these governors, who typically, I guess, Wayne, go in line with the chairman, all voted for this. So they all got on board for this. Was there a sense, do you think, that since this is such an historic turn or shift, that everyone had to be on the same page? Wayne?
Do not be bearish on the U.S. economy. This is a bullish factor to have the Fed let market interest rates play a little more role and no longer freezing the funds rate at near zero.
I think it's bullish more, though, Neil, in the sort of the verbiage that Peter read to us earlier, and we have to hear exactly what she says. You know, the fact is that they're not talking about steadily increasing rates over the next year. They are talking about a real wait-and-see attitude. And you know what? I'm getting some cake, and I'm going to eat it too.
But Charlie, and Neil, in the text that the Federal Reserve has released in this interest rate hike, they make a lot of indications of a strong economy. Household spending, business, fixed investment have been increasing at solid rates, using words like that.
Yeah, but
housing sector has improved further, Mr. Schiller. And then the weakness they point to, actually, net exports have been soft. And look at that, Neil, after you just pointed out the strength that we're seeing in the greenback after this announcement. We're getting an even stronger dollar now.
Yeah,
that's hurting our export market.